So, looking at the market today, versus maybe 5 years ago, what is the current SPAC structure in terms that you're seeing?
SPAC structure is a big consideration for any SPAC team. I think that there are a few ways to make your SPAC structure attractive to investors. Normally, there's a unit that's being offered, and of course, all the units have a common stock, no surprise there. But then you have a couple other ingredients that you could put into the unit to make it attractive to the market. One is a right, and what a right is it is a security, but it's a security that only becomes common shares if you successfully de-SPAC. And so the way that a right would work, for example, if you bought a unit that had a common and a 1-for-10 right, that would mean for every 10 shares that you purchased in the IPO, if the company successfully completed its business combination, you would get one additional free share at the closing. So in a way, it's like a stock dividend. And we see those right ratios anywhere from 1 to 5 all the way up to 1 to 20. Very popular structure. It's like I said, it's like a stock dividend. The reason that SPAC teams like it is dilutive, but it's a one-time dilutive event that happens at the business combination. The other thing that it also does is it creates more shareholders when you de-SPAC, which is always helpful when you're looking to de-SPAC in case you have a scenario where you have higher redemptions. Another security that's typically offered in a SPAC, and we're seeing this come back more and more, and that's the warrant structure. The warrant structure, it's usually a 5-year warrant, and it's typically priced over 11.50 a share, where the IPO would take place at $10. So it's an above the market warrant. Most of our SPAC teams don't like warrants because there's a perceived overhang. There's always a consideration that is somebody going to short against the warrant, hypothecate it in the market. And I'm not sure of all the technicalities on how that happens, but a lot of people do find the view that even a warrant, which is not even an outstanding security, can somehow be used in market trading. So most SPAC teams try not to issue a warrant, but sometimes they will do it to increase the time of the SPAC, which is the other part of the structure that's important, is how long do you have to make your business combination? And the range that we're seeing right now, and this is good for SPAC teams, good for people that are looking to form a SPAC, and that's the time has gotten longer. People are becoming a bit more patient because there are good deals out there. So we used to see SPAC terms of 12 months, 15 months, and then you had to pay all kinds of money to extend those SPACs. Now you can get 18 months, 24 months in many cases to complete the business combination. So very attractive. I would recommend any SPAC team try to get as much time as you can. I know 24 months sounds like a long time, but you want more time than not, because I've seen so many groups that have had to pay millions of dollars in SPAC extensions. So it can get quite expensive.